Coming up on Market to Market, the EPA and the Army Corps join forces on waters of the U.S., investigating prices charged for fertilizer and prices paid by packing plants. A long-running Midwest Refugee Center worries about the future. And commodity market analysis with Jeff French next.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, November 21 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Brooke Kohlsdorf. Paul Yeager is on assignment. After more than a month, U.S. government reports, delayed due to the government shutdown, are starting to trickle in. However, the economic snapshot is 2 months old. The October report will never be released because no data was collected while federal employees were on furlough. The unemployment rate ticked up slightly in September to 4.4%. During that same month, 119,000 jobs were created, more than double industry expectations. Data gathered 7 weeks ago revealed the trade deficit fell 24% in August as President Trump's sweeping global tariffs pushed imports lower. Between January and August of this year and the same time period last year, the trade deficit is up 25%. Creighton University's Rural Main Street Index, a report not held up by the lack of government data, sank below growth neutral for the 9th time this year. More than half of the bank CEOs surveyed in the 10-state region believe we are either in a recession or we will be in one next year. Sales of existing homes, an indicator of the overall health of the economy, rose 1.2% in October, but the market has been in a slump since 2022. The Obama and Biden administrations made a bid to broaden the definition of what exactly are the waters of the United States. After several attempts, they ran up against the Supreme Court. That landmark decision narrowed the definition of WATUS and reduced federal jurisdiction. This week, the EPA and the Army Corps of Engineers joined forces to make another run at a definition. Colleen Bradford-Krantz reports.
Pointing to 5 decades of confusing and ever-changing definitions, the EPA and the Army Corps of Engineers announced on Monday another attempt at clarifying the phrase waters of the United States.
I know that across the country, news of today's proposal is going to be met with a lot of relief and happiness from farmers, ranchers, other landowners, governments that have been looking for a simple, prescriptive definition.
Since 1972, Americans have struggled to understand what Congress meant when it included the term waters of the United States in the Clean Water Act. The definition of that term has been often abused, sometimes stretched beyond recognition over time, and it's left Americans uncertain about whether they were complying with the Clean Water Act or not.
Federal officials say their proposal, which addresses the concept of continuous surface connection, is consistent with a 2023 U.S. Supreme Court decision. The proposal addresses the scope of adjacent wetlands near regulated traditional navigable federal waters. The proposed rule says the water would need to have a continuous surface connection with both surface water, at least during the wet season, and abutting a regulated body of water. EPA officials say they recognize that in some instances, drought or tide flow may need to be considered. Before the new guidance is implemented, federal officials will seek written feedback and hold listening sessions.
I'm hopeful that whatever happens with the body politic over the next 10 years, that this could be a durable rule because it's common sense.
For Market to Market, I'm Colleen Bradford-Krantz.
In recent months, the Trump administration has put a focus on the price paid by grain farmers for inputs and the amount packers are paying cattle producers for their animals. Abigail Slater, the Assistant U.S. Attorney General for the DOJ's Antitrust Division, has been on the case in both instances. Over the past 9 months, AAG Slater has taken time out from her legal work to speak with law students at several universities across the country. Peter Tubbs was at her most recent lecture.
This week, the Assistant Attorney General for the Department of Justice's Antitrust Division defended the DOJ's plans to enforce antitrust laws that affect agribusiness. Speaking at the Drake Law School in Des Moines, Iowa, Assistant Attorney General Gail Slater asserted that evolving markets require steady monitoring as conditions change.
If our big tech cases against Google have taught us anything, it's that even relatively fast-moving internet markets can remain monopolized for decades. Our litigation experience suggests that we cannot assume that markets will always self-correct, that market concentration is never a problem, that entry is always easy, that exclusionary conduct usually fails, and that buyer power is never an issue worth investigating.
Slater also spoke to the importance of enforcing the Packers and Stockyards Act, which functions as a safeguard against exploitation of farmers and ranchers by the meatpacking industry.
This is the rancher's American dream, but this can only happen if the current generation can keep their ranch operating in free, fair, and competitive markets. For this to become reality, our great farmers, ranchers, and small businesses like independent seed dealers need an antitrust cop on the beat.
For Market to Market, I'm Peter Tubbs.
Those escaping poverty, political persecution, or threats of bodily harm have been coming to the United States for nearly 250 years. Those who enter the country illegally face detention or deportation. The Trump administration has reported nearly 2 million illegal immigrants have either been deported or self-deported since January. Some sources dispute this number, but say it is in the hundreds of thousands. The door for so-called at-risk refugees is not open as wide as it has been in the past. In October, the White House set the lowest ceiling since the resettlement program for at-risk immigrants was established in 1980. By comparison, 125,000 were allowed into the country only 2 years ago. In 2026, that number will be cut to 7,500. The cut mirrors a Trump administration move to reduce funding for agencies that help newcomers navigate day-to-day needs. On the ground in Illinois, one refugee center is concerned about what that means for the people they serve. Colleen Bradford-Krantz has more in our cover story.
Louis Nguyen, a 2004 immigrant from Vietnam, still visits the Refugee Center in Champaign, Illinois for occasional help with bureaucratic paperwork.
I love it here, and I help somebody do good, and how some people have the good life and understand anything the paperwork. I love it here.
He heard great things about the Refugee Center upon his arrival. What he didn't know then was that it was a fellow Vietnamese immigrant, Tam Nguyen, who helped establish the organization in 1980. Now 99 and living in an Urbana assisted living facility, Tam Nguyen tries not to worry about the 45-year-old center's future amid federal funding cuts threatening refugee services nationwide. Refugees are a category of immigrants who are legally allowed in the United States when they are unable or unwilling to return to their homeland due to well-founded fears of persecution. Born in French colonial Vietnam in 1926, Tam grew up near Hanoi. During the 1946 French Indochina War, she witnessed her husband's death as he treated a wounded soldier, making her a widow at age 20.
And I tried to open his jacket, and I think too much blood, and I pass out. I think he passed away right in front of me.
After discovering a passion for teaching at several schools in Vietnam, Tam went on to study education, earning a bachelor's degree by 1951. With communists threatening her non-communist family, she was eager to continue her education abroad, first in Geneva, then at the University of Illinois, earning a graduate degree in educational psychology. There she met and married Lunxin Wei, a scientist focused on soybean research, and they raised 4 children in Illinois. By 1970, Tam Wei was working as a traveling school psychologist. At the time, the U.S. was involved in the Vietnam War, and she worried about working in the rural United States. However, she almost always found kindness and gratitude.
But it's very challenging because Vietnam War still going on, and I'm a woman. They may never see a Vietnamese woman. But anyway, that's okay. I'm the one want to hit on the challenge. But you know, when you're very sincere and very really want to do something for the kid, it goes through.
As Southeast Asian refugees arrived in Champaign-Urbana, Tam's memory of being a newcomer inspired her to action.
So what I should do? I should do something. That's the only thing. Even I have no idea about administration.
With friend Quýt Nguyen, a former Vietnamese school administrator, Tam rallied local churches to sponsor refugees. Their efforts culminated in the Refugee Center's 1980 opening in a small room in an Urbana church.
I first got involved about 1978-79. I had just come to town to work as a director of an adult education program. One of the courses we offered was English as a second language. And through that, I met Tam Wei and also her co-director, Quýt Nguyen, as they were helping new arrivals. Tam Wei is very persuasive. So she said, "Oh, John, it would be good if you were on our board." And so that's how things started.
John Muirhead is proud of the help the center has given to a long list of refugees and other immigrants who have come to the area.
It's really amazing when you think back over the almost 45 years that I've had the privilege of witnessing this.
But the Refugee Center faced a challenge early this year when President Trump cut refugee funding. Within months, the federal government canceled contracts with groups overseeing refugee centers nationwide, including the U.S. Conference of Catholic Bishops, the center's supervising partner. The cuts forced the center to reduce its budget by about 15%, though state support and private donations will sustain other immigrant services, even as refugee assistance suffers.
Refugee resettlement is the gold standard of legal immigration. People are vetted, they are interviewed, they have support through either family that's already here or agencies like ours. So I'm very sad to see that the Trump administration has decided to target refugee resettlement.
Tam's message of compassion, which she brought to other Midwesterners when establishing the center, remains as relevant today.
What they have only the dignity. If your church able to give so much, why don't you give them the amount and let them spend it? Instead of make them come and ask for that. You need to think of the dignity of the people.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market report.
One programming note, we are recording this week's show on Thursday due to a busy production schedule. In the markets, prices were mixed for the week after adjusting for last week's report and responding to the most recent Chinese purchases. For the week, the nearby wheat contract continued to be flat and the March corn contract fell 6 cents. There was another flash sale of soybeans to China on Thursday morning. The January soybean contract dropped 2 cents, while January meal cut $7 per ton. March cotton contracted by 39 cents per hundredweight. Over in the dairy parlor, December Class 3 milk futures weakened 40 cents. The livestock market was mixed. February cattle dropped by $4.13. January feeders cut $4.17, and the February lean hog contract put on 27 cents. In the currency markets, the U.S. dollar index was higher by 90 ticks. January crude oil lost $1.13 per barrel. COMEX gold dropped $33.40 per ounce. And the Goldman Sachs Commodity Index was down more than 2 points to settle at 556.55. Here now to lend us his insight on these and other trends is our regular market analyst, Jeff French. Hi, Jeff.
Hi, Brooke. Great to be here.
Nice to have you. So we've had a week now, the market's had a week to digest what was in last Friday's WASDE report, which was long anticipated. China is back to buying again. Are those two things weighing on the market? Are those the two things responsible for what we've seen or haven't seen this week?
Yeah, first part about the report, it weighed on the market, but the report, in my opinion, it almost opened up more questions than answers. You know, we got that report after the government was shut down for 40 days. I mean, they came back to work for 2 days and were supposed to, organize all this information and get it in. So it felt a little rushed to me. And, in my opinion, from just talking with my clients and traveling the Midwest, that corn yield seems awfully high. I mean, most of the guys that I talk with are worse than last year. Very few are better than last year on their corn yields. Now, we do have to deal with the 98 million acres of planted corn. I mean, that's a lot of corn acres in the ground. But, I think the report, it weighed on the market, but also seasonally going into late November, into Thanksgiving. The saying goes that bears get Thanksgiving. Regarding the Chinese sales, yes, good to see. We had this big run up for the last month since middle of October, put $1.30 a contract on the beans. But then we started to get the Chinese announcements, and they were kind of trickled out. It's classic buy the rumor, sell the fact. Now we've backed off here about 40 cents off the highs. Today's close here on Thursday, right at around 11.22 in January. 11.20 is that 20-day moving average. We have not closed below the 20-day moving average since the rally began in October, mid-October. So technically, we're kind of setting up in a range that we should find some support. I think it'd be interesting if the Chinese, if they want to fulfill their 12 million metric tons, here in the next couple of days, they should be buying this dip.
Yeah. What about, when we talk about wheat, and you were talking about the WASDE report, is that the thing that kind of took the excitement out of the wheat market this week?
Well, actually, it was rumored that China was buying wheat. And today we actually got confirmation that they bought a couple cargoes of white U.S. wheat. But also, news out of Argentina. I mean, Argentina right now has very cheap wheat on the world market. It's actually cheaper than U.S. corn currently right now. China, also the Soviet Union, Russia out this week with up in their total wheat acres. They're up, their production up 88 million metric tons. So the Black Sea region will continue to, control the world wheat prices. And also, U.S. wheat prices got up in that 3 to 4 month high and kind of just ran out of ammo to continue higher.
Okay, so going back to corn, you were talking about the WASDE and how it had an impact on all of the grains. Is it going to be stuck for a while until we get the next report, which is mid-December, right?
Yeah, so it will be, the next report will be December 9th, Tuesday. Historically, December report, they don't change anything from the November report because then they're ramping up for the final production report in January. But I think this year, the December report will have some changes. I think now you're going to have more surveys. The USDA is going to be back to work. So I think that report will be highly anticipated. If you look historically from November to the final report, what are some of the biggest cuts in corn? You go from 186 down to 182. That would be historically very large, a 4 bushel break. But this is not a normal year with a shutdown. So I would anticipate that the yield's coming lower, but we'll just have to see what happens.
Okay, you don't know how low, though?
Well, last year was 179. And, from who I talked to, most producers did not have as good a corn as last year. Again, though, we do have more acres that were planted.
Okay. So, yes, the big news this week, China buying some of our beans. Is it enough, or how much more are they going to have to buy for it to start moving the market in the next few weeks?
Well, the nature of the futures market, they build that information in very quickly. And we rallied this market in about 5 weeks, $1.30 off the lows. So they put in that bullish information. But if you break down the numbers, confirmed purchases, they have purchased 1.6 million metric tons. Each million metric ton is 37 million bushels. So they got on the books right now, confirmed 60 million bushels of beans purchased. The agreement, 12 million metric tons, is right around 440 million bushels. So if they are going to fulfill their agreement, the trade deal with the United States, they got a lot more buying to do. And they throw away around that December that has to be completed. Well, that's historically. I mean, typically we sell all our beans through December, and then they transfer down to Brazilian crop coming on board. But, with the trade deal, I mean, they could keep buying right after December with the U.S. beans as well.
I want to go to social media for our next question, which has to do with beans. So this is from Phil in Ontario, and he says the USDA report took the steam out of the price rally since October 1st, or is this just a Thanksgiving retrenchment? Can the price rally pick up steam again on South America weather, or an inadvertent black swan event?
Well, the question to those is both yes. I mean, South American weather will drive the bean prices. Not quite yet, but you get into that January, February time period where the beans are filling pods down there, absolutely that can drive the market. I mean, Brazil alone is expected to plant 120 million acres of beans. So they are ramping up to plant a lot of beans. Okay. The black swan event, obviously, that's something that we always have to take into effect, but it looks like, at least from the charts right now, that the bears will have Thanksgiving. Let's see if the bulls can get Christmas.
Okay. Last week on this show, it was suggested that the cattle rally was over. Have we seen the highs?
Well, I mean, I'm not going out on a limb there. I mean, we made new lows for the move here today. A lot of these markets is about momentum. And right now, unfortunately, the momentum in cattle is to the downside. And, in my opinion, you look at the charts and you look at where we're at. I mean, you got all the fat cattle trading right around that $200 mark. I think we'll probably test that here in the next couple of weeks. We can see if we have, psychological support. Feeders look like they want to test that $300 mark. I mean, it just feels like the momentum is down right now, and, we are oversold. But you got to remember, I mean, we went up for 10 months straight in a row. I mean, we just went up almost every other day. So right now, yeah, the prices are looking like we are going to continue to slide.
I know this is an old story, a couple of weeks, but the Trump administration saying they wanted to bring beef prices down. Is that still impacting the feeder market?
Oh, I think, it's just the psyche of the market. I mean, when you have the administration saying they want to bring the product down, the prices down, the investors and the funds, they're going to say, okay, I'll go play somewhere else. I mean, if I'm managing money and I'm long and I have a good position on, I'm going to sell that position and collect my money. So that's what we've seen here. Now with the CFTC just open, but they were closed for 7 weeks, they had a huge long position. But I anticipate by the time when we catch up to the reports, the funds have switched from being long and actually are now short and pressing the prices lower.
Okay. What about seasonal demand coming up with the holidays? Will that be doing anything enough to the market?
It helps. I mean, there's no question. Beef demand has been great. That's the thing. Nothing really changed fundamentally, but everything changed. I mean, I know that doesn't make sense, but, demand and the numbers have been tight. Now we got some carcass data that, the carcasses are heavy. We're averaging 983 pounds per carcass per steer. Which is 26 pounds heavier than last year. I mean, we are producing some very, very heavy cattle, but, the market can handle it. I mean, the beef demand has been robust.
We have just a little bit of time left, about 20 seconds. What about hogs? Is there any fresh news there?
Well, the hogs, from September 30th, I mean, we've been pretty much straight down. The funds were long 146,000 contracts. Seasonally, the hogs in November tend to work lower. But yeah, they're getting caught up with the sell-off in the cattle as well. You know, typically the protein complex, they roll together. Unfortunately, they've been rolling downhill here now.
The sympathy, yeah, is that what they call it? All right. Jeff, we've covered a lot. Thank you so much for being here, and we will have more to discuss in Market Plus, no doubt.
Thank you.
All right. Well, you have been watching the analysis segment, and in a moment, we will continue our discussion in an online-only segment. You can search Market Plus with Jeff French wherever you get your podcasts to hear that conversation, or go to our website of markettomarket.org. We want to make sure you never miss any of our content. So when you subscribe to our YouTube channel at Market to Market, there are benefits of being there. When you turn on notifications, you'll be at the front of the line for our stories, Market Plus, and M2M podcast. Next week, commodity and economic analysis with Chris Robinson and Ernie Goss. Thanks so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.